Hello students, welcome to Accounting 2302. This is Managerial Accounting. My name is Dr. Claudia Mercado and I will be your instructor for the course. We are using the textbook Financial and Managerial Accounting by Warren Jones and Taylor, 16th edition. Now, before I begin with the lecture, I do want to give you a brief overview of what to expect on my lectures every week. Okay, I select one or two problems, the ones that I feel are a little bit more challenging, or the ones that don't have a video attached to them in Cengage, and I record those lectures and I basically do problem solving with you. That way you can have a better understanding of the problems. Okay, now some of these lectures are a little bit long. For example, in this problem that you're going to be seeing today, it is a two-part problem where we have to complete two different schedules, so anticipate it being a little bit lengthy. Okay, now before you begin working on your homework problems, I cannot stress it enough, the importance of reading the chapter. Okay, it is extremely important that you read before you attempt the problems. If not, you are going to be completely lost. Do not skip that step. Okay, now the majority of the problems in your homework have embedded videos in them. Okay, that will help you complete the problem. Okay, they're shorter videos, but they do give you a rundown on how to complete the task at hand. Now that in conjunction, the videos in conjunction with the PowerPoints, in conjunction with your reading, should be more than enough resources to assist you in completing your homework. If you have questions about a specific problem or you're doing a specific calculation and you're having issues, you can always reach out to me. I am available to assist you, but I do need to see your work. Okay, so if you have a question about a problem, I need to see a screenshot of the problem that you're working on and your attempted step-by-step solution so I can review your work and be able to provide guidance. I am not going to give you the answer. I'm going to show you what you're doing correctly and then guide you so you can do it correctly. Okay? Now, I am going to illustrate in this video how, if I were a student, I would tackle the specific problems. Okay? Now, the problem that we are going to be tackling today is problem 15.05A. Okay? Now this problem will be on your exam, so I am covering it so you have a very good understanding of how to complete it. You are going to have to complete a statement of cost of goods manufactured and an income statement. So you have two things that we're going to be dealing with in this problem. So it is going to be a little bit long. So let's look at the problem. Problem 15.5a, statement of cost of goods manufactured and an income statement for a manufacturing company. The following information is available for Robstown Corporation for 20Y8. Then they give you a whole bunch of information, the inventories, the beginning and the ending, with a whole bunch of additional expenses that were incurred, both for the factory and the office. So you need to be able to differentiate what you're going to put in the cost of goods manufactured and what you're going to be putting on your income statement. Okay, so you need to have a general understanding of what is it that you're doing. Okay, so the two tasks are to prepare the statement of the goods manufactured and the income statement. I've created the templates for you. Now let's look at the first requirement. We're going to prepare the statement of cost of goods manufactured. Okay. If I'm a student and I'm tackling this problem, I'm going to go to my ebook and I'm going to look for the section that talks about the statement of goods manufactured, and I'm going to review that information. Okay, and there's more information on your book. I'm not going to cover it all. I'm not going to copy it here, but just so you can have a general understanding of how is it that I tackle the problems. Okay, so what I do generally is I read the entire chapter. And then when I am working on specific problems, I target those areas. Okay, so if I know I'm working on the statement of cost of goods manufactured, I'm going to go back to my ebook, to that specific section, and read over it for that specific problem. So the textbook basically says that the statement of cost of goods manufactured summarizes the cost of goods manufactured for a specific period. Okay, and then they give you an example. Okay, examples are wonderful because then you can follow along. They go on to explain that the statement of cost of goods manufactured is prepared using the following three steps, and they give you three steps. Step number one is to determine the cost of direct materials used during the period. Step number two is to determine the total manufacturing cost incurred during the period. And then last but not least, step number three, we're going to determine the cost of goods manufactured during the period. Okay, so we're dealing with direct materials, total manufacturing costs, and then the cost of goods manufactured during the period. Okay, so I would review this information in detail and then begin tackling the problem. Now, if you look at the example provided, we are always going to begin with our beginning work in process inventory. Okay. The beginning work in process inventory is what we started last period, but we have not ended. So that means that whatever was started needs to be completed this period. So that is going to be always our starting point. Okay. And then from there, we move on downward. Okay. So let's begin working on the problem. Okay. So using this data, we are going to fill it out. So we're going to start off, like I said, with our work in process inventory. And this is at the beginning of the year. Okay, let me make this a little bit bigger. Okay, there we are. So our work in process inventory at the beginning of the year, and we look at the table. The work in process, January 1st is the beginning of the year, December 31st is the end of the year. So we're going to start off with, and I'm going to be marking them off, okay, as I use them, okay. And let me mark them off with that one, okay. So my working process at the beginning of the year is $63,900. I'm going to start off with that. So like I said, this is what is still in process. The goods have not been completed. We need to complete them this period. Okay. So we started off with $63,900 in work in process. Then we're going to go to our direct materials. Okay. Now if we look back, direct material costs. Okay, manufactured products begin with raw materials that are converted into finished products. The cost of any material that is an integral part of the finished product is classified as direct material costs. Okay, so these are the costs of the materials that are related to the product that we are manufacturing. Okay, that we can tie to that specific product. Okay, so we're going to start off with our materials inventory. Do we have any materials left over from the prior period? So let's look at our materials. And yes, we do. We have $44,250 sitting in our warehouse from the last period. Okay, so let's go ahead and let's mark that. And I like to mark them because I want to make sure, that I know what numbers I've used. Okay, so we're going to have direct materials. We're going to have materials inventory. Materials inventory, January the 1st, 20Y8. Okay. So we have beginning materials of $44,250. Okay. So that is what we are carrying forward from the last period. Okay. Now, our next question is, did we make any additional purchases of materials? Okay. So let's look over the information. And it says here materials purchased. So I'm going to put here materials purchased. Okay. So we purchased materials of $556,600. Okay. That is what we bought in additional material, $556,600. Okay. So we have our beginning materials that we are carrying forward, plus the materials that we purchased this period, which was $556,600. That is going to give me the cost of materials available for use. This is what we have available to be able to manufacture whatever is it that we're manufacturing. Okay, so we're going to add those together, and then that's going to give us, let's see what it gives us. We're going to add those two numbers together. It gives me the cost of materials available for use is $600,850. So that is what dollar amount of materials we have available to spend on the manufacturing our products. Okay. Now, did we have any materials available at the end of the year? Because our financials are for a year span from January through December. So this is what happened during the entire year. Okay. Did we have any materials left over at the end of the year? And if we look at it, at the end of the year, we have $31,700 left over. We're looking at December 31st. So let's scratch that number off. So we've used that one. So we have materials inventory at the end of the year. Okay. So we have 31,700. Okay. Now I'm going to put that in negative because that is what we have available. That is what we have not used. Okay. Okay. So my ending inventory in materials is 31,700. So what does that mean? That during the year, the cost of production for direct materials, the cost of direct materials, excuse me, cost of direct materials used in production for the year, it is going to be the 608.50 minus the 31,700, and that's going to give me 569, and I'm going to put that over here because that is my total. Okay, so the cost of my direct materials used in production this year is 569,150. Okay, so let's run through these numbers again. We began with 44,250 in materials. We purchased 556,600 in additional materials during the year. That brought us up to 600,850. Then if we look at the table, we know that we have 31,700 of materials left over, which we have not used. So that means that during the year, the cost of the direct materials that was actually put into production is 569,150. Okay? So this is the section of the materials. Okay? Now we're going to move on to our direct labor. Okay? Now direct labor, okay? Direct labor costs, and all of this is coming from your ebook. So when students tell me, I don't know, the book doesn't tell me, it tells you. We just need to go find it. Okay? So direct labor cost. Most manufacturing processes use employees to convert materials into finished products. The cost of an employee wages that is an integral part of the finished product is classified as direct labor cost. Now this has to be labor of people actually making the product, okay? This is not the janitor cleaning. This is not the supervisor overseeing. No, this is the actual people that are putting the things together, manufacturing the product that you're selling. That is direct labor. They are directly working on the product, okay? So, direct labor, do we have direct labor? And yes, we do. If we look at the table here, we have direct labor of $1,100,000. Okay, so let's put $1,100,000. Okay, now we have 3 columns of data. Okay, and let me just clarify. On the first column, if we have to do calculations to get a grand total, like we did here for the cost of direct materials, we put the initial calculations and then the subtotal on the second column. Okay, grand totals are at the third column. Okay, so here we're going to be doing a calculation. We're going to get our cost of direct materials used in production. We're going to get our direct labor, and I think I put it in the wrong cell. It should be down here, 1,100,000. Okay, and then last but not least, we have factory overhead. Okay, factory overhead. These are the 3 components in the manufacturing process: direct materials, direct labor, and factory overhead. Now, factory overhead is the most complex of them all. Factory overhead costs are costs other than direct materials or direct labor that are incurred in the manufacturing process. These are known as factory overhead costs, and there's a lot of factory overhead costs. Okay, all factory overhead costs are indirect costs of the product. Okay, and these are some examples of indirect costs. This could be heating and lighting for the factory, repairing and maintaining the factory equipment, property taxes on the factory building and land, insurance on the factory building, depreciation on the factory plant and equipment. Okay. Factory overhead costs also include indirect materials and indirect labor costs that are not directly traced to the finished product. Okay? Examples include maybe the cost of glue used to assemble guitars, the wages of the janitorial and the supervisory employees. Okay? So, like you see here, I went and I explained and defined each of the three components that we are looking at in the problem. So now we're going to have to dissect the information from what we have provided. Okay, so the first thing we have is, and I'm going to put them in order here, in dollar order. We're going to start off with the indirect labor. Okay, this is the labor that is not associated with the manufacturing, but it still entails part of the factory related expenses. We have indirect labor. So we have here, we have indirect labor of $115,000. Okay, so I'm going to get a total, so I'm going to put them in my column here. We have indirect labor. Then we have depreciation expense on the factory equipment. Okay, and these are expenses related to the factory. Okay, so my depreciation expense for the factory equipment is $30,000. I'm sorry, not for the office, for the factory. It's down here. It's $80,000. We're working with the factory, so then my depreciation expense for the factory is $80,000. Okay, so we're looking at factory related expenses. Then we have our heat, light, and power for the factory. We cannot operate without heat, light, and power. So we're going to have heat, light, and power for the factory. And there we spend $53,300. Okay. Next, we have, let's see what else we have that is related to factory. So we're focusing on factory, okay? So we have the property taxes on the factory. We have that, okay? So we need to pay property taxes on the factory. Okay. So property taxes on the factory, $40,000. Okay, so I've used that up. Okay, so what else do we have for the factory? Okay, we've got the rent expense for the factory. So we've got rent expense for the factory, $27,000. Okay. And then we have supplies for the factory. And we have, for the factory, we have supplies of $9,500. Okay. And then we have miscellaneous. Miscellaneous will always go at the bottom. Miscellaneous costs for the factory. And miscellaneous is basically the account used where it doesn't apply to anything else. You put it under miscellaneous, and we had miscellaneous costs for the factory of $11,400. Okay. Now, if you look here, I have my factory overhead cost in order by dollar amount. Okay. My labor was the highest amount, and then we go down. Miscellaneous will always be the last amount, regardless of the dollar amount. Okay. So we have all of these factory overhead costs associated with the factory. Okay. So now I'm going to get my total factory overhead. Okay, so I'm going to add all of my cost here, and that gives me $336,200. Okay, so I've got my three components: direct materials, direct labor, and factory overhead. Okay, we've got those three totals. Okay, now that we've got the three totals, we can get our grand totals, and our grand totals go on the last column. So we're going to have our total manufacturing costs incurred in 20Y8. Okay, so for that, I'm going to go ahead and I'm going to put it in the last column. I'm going to get my cost of direct materials plus my direct labor plus my overhead. And that's going to give me $2,005,350. So I added these three numbers: total direct materials, direct labor, and overhead. and that gives me my 2,005,350. Okay. Now I'm going to get my total manufacturing cost. Now, the first line is the total manufacturing cost incurred this year. Now I'm going to get the total manufacturing costs. Okay. That will include our beginning, work in process, plus the cost incurred during the year. So we're going to add those two together. Our work in process that we started off with at the beginning of the year, plus what was spent in manufacturing this year. That includes direct materials, direct labor, and overhead. And that gives me $2,069,250. Okay, that is my total manufacturing cost. That includes whatever was started last year that didn't get finished and whatever we started this year. Okay, total manufacturing cost of $2,069,250. Now, did we finish all of the products that we started this year? Okay, that is the question. Because remember, we had this balance roll over from last year. Are we rolling over an amount for next year? Did we complete all of the products that we started, or do we have some that are still pending, that are in the pipeline? Okay, so let's look at the working process. We started off with 63,900 and we ended up with 80,000. That means that we have $80,000 of work in process that has not been completed. Okay, so we have work in process inventory as of December the 31st of 80,000, and I'm going to put that in parentheses because that is a deduction. You know, that represents the amount of goods that have not been completed, therefore we cannot sell them. They're not complete. Okay, so that's my working process that I'm going to carry forward next year. So this number next year that you prepare your statement of cost of goods manufactured will go up here. Okay, so we have that. So that means that now I can calculate how much actually was spent in manufacturing this year. Okay, so my cost of goods manufactured for the 20Y8 year, cost of goods manufactured is going to be the $2,069,250 less the $80,000. Okay, that gives me $1,989,250. So that is how much I actually spent on manufacturing goods this year from beginning to end. So this includes two components: the goods that were started last year that we finished this year, plus anything that we started and finished this year. Okay, so what we've done is the total manufacturing cost is $2,069,250. We excluded the 80,000 that are still in working process. Let me mark that off because we've already used this 80,000. So those 80,000 we're not going to count in our calculation because they're not finished yet. So we're going to roll it over for next year. So that means this year we actually spend $1,989,250 in materials, in labor, and in overhead in manufacturing those products. Okay. So now that we've got this complete, we are going to be using this number when we prepare our income statement. So the statement of goods manufactured basically just gives you a breakdown of how much you spend in materials, in labor, and in overhead. And it kind of like organizes the information for you so you can be able to calculate how much did you actually spend manufacturing your goods this specific period or this specific year. Okay. Now, that is the first part of the requirement. The second part of the requirement is to prepare an income statement. Now, if you recall from Principles of Financial Accounting, an income statement is basically your revenues minus your expenses. Now, for a manufacturing company, it differs a bit. Okay, so if you look at your textbook on section 15.3B, it talks about the income statement and it has a comparison between a retail business and a manufacturing business. Okay, so there's differences between a service, a retail, and a manufacturing. So we're going to have different accounts added to our income statement, but overall the process is very similar. Okay. So I'm going to let you all read that section for you in the income statement. So let's tackle the income statement. Okay. So when we do our income statement, we always begin with revenues, okay? Always begin with revenues. So let's look at the information provided and let's locate our revenue account, okay? So if we look here, we have sales of $3,850,000. Let me just select here. Okay. So we have sales of $3,850,000. Okay. So we're gonna have, that's gonna be our starting point. How much did you sell these goods for? Well, my sales were $3,850,000. Okay. Let me hide this for a bit. Well, no, I'm gonna need a number from it. Let me leave it there. Okay. So I've got sales of $3,850,000. Okay. Now we're gonna go and we're gonna figure out our cost of goods sold. How much did it cost me to produce these goods? Okay. So we're gonna begin with our finished goods inventory. January the 1st, 20Y8. Now this cost of goods represent the goods that were completed last year but that were not sold as of the end of the year. They're available to be sold but they have not been sold. So these are the finished goods inventory at the beginning of the year. So these were produced last year but they have not been sold yet. So how much did we have in finished goods? At the beginning of the year, we had $101,200 worth of finished product that had not been sold. So let's put that here. I'm sorry about that. Okay, let me mark that off. Okay, so that represents the amount of goods that are sitting in our warehouse that we have not sold. Okay. Now, we are going to incorporate the cost of goods manufactured. Okay. Now, that is the finished goods inventory is what was carried over from the prior year. Now, how much did we actually manufacture this year? Okay, in 20Y8 from January through December, how much did we manufacture in goods? And we've already calculated that number in our statement of goods manufactured. We had a cost of goods manufactured of $1,989,250. So that number is going to flow into here. Okay. So we're going to carry whatever you calculated on your statement of cost of goods manufactured. You're going to carry that over to your income statement. Okay. So that is how much you spend in manufacturing the goods during 20Y8. Okay. So the total that we have here is the cost of goods available for sale. This is what we actually have available in our business, in our warehouse, to be able to sell to our customers. So we're going to add those two together. Okay. These are finished products that is available to be sold to our customers. So that gives me $2,090,450. Okay. Now we have to figure out, okay, this is what we have available at the end of the year. Did we have any product at the end of the year that we had not sold? So we have our finished goods available for sale, or our finished goods inventory per se, inventory on December the 31st. Okay. Did we have any finished goods at the end of the year that we did not sell? And if we look at the problem, we have $99,800 of goods that are still remaining in our warehouse that have not been sold. Okay. So I am going to deduct that number because that represents the amount of goods that we still have on hand. Okay. We still have that available. Okay. So now I can actually figure out, well, if that is what you have available, when we're doing these problems, we have to talk to ourselves. Okay. So we have to say, okay, from last year, we had $101,200 worth of products that we did not sell, that were completed but we did not sell. During this year, we manufactured $1,989,250, so that gave me $2,090,450. But if we look at the data, we have not sold $99,800. So if you have not sold 99,800, then how much have you sold? Okay. So now I'm going to calculate the cost of goods sold. Okay. And the cost of goods sold would be the 2,094,50 minus the ending inventory of your finished goods. That would give you 1,996,50. Okay, that is how much you actually the expenditure, the cost of manufacturing the goods that you sold during the year. Okay, 1,996,50. Okay, so if you sold your goods for 3,850,000 and it cost you 1,996,50 to manufacture those goods that you sold, then what is your gross profit? Okay, how much money did you make? Okay, so we're gonna get our sales minus our cost of goods sold, and that's gonna give me 1,859,350. That is the profit that I make by manufacturing the product that I'm selling. Okay, so I sold it for 3,850,000. It cost me 1,996,50 to manufacture those goods. So I had a gross profit of 1,859,350. Now, is this what I'm taking home with me? No. Okay, because in these calculations we are only including direct labor, direct materials, and overhead. Those three components. On the income statement, we have to incorporate one more component, which is our operating expenses. Okay, and our operating expenses are classified into two types. We have administrative and we have selling expenses. Okay, so this is how much we generated, the gross profit, before any operating expenses. So now let's start off with our operating expenses. Okay, and we're going to start off with administrative. So let's locate our admin expenses from the table. Okay, so let's run our numbers from anything that we have not used. Okay, if you see here, we have office salaries expense, $318,000. So we've got people working in the office doing paperwork and stuff like that. They're part of the administrative expenses. So we're going to have office salaries expenses. Office salaries. Okay. And we have $318,000. So we spent $318,000 on office salaries expense. Okay. So if we continue looking, we've got depreciation expense for the office equipment. So these people that work in the office need equipment to work with. So we have depreciation expense for the office equipment. Okay. And according to the problem, okay, we spent on the office depreciation for the office equipment $30,000. Okay, so I'm going to include that there. Okay. Then I'm going to keep on looking for office related. We've got property taxes on the office building. Okay, those people that work in the office have need a place to work, so they've got an office building. So we're going to have property taxes on the office building. So if you see, these are related to the office personnel. These have nothing to do with the actual manufacturing of the product. These are just general operating expenses. Okay, so we've got property taxes for the office building. Let's mark that off. And we've got $25,000. Okay, so let's review. We are just left with two things, and that does not apply to operating. So we're going to get our total. So we're going to get our total for the administrative expenses. We're going to add those three items together. So my administrative expenses are $373,000. Okay. Now I have selling expenses. Okay. Now for selling expenses, I've got my advertising expense. Okay, I can't sell my product without selling expenses. Okay, so this is a big chunk. This is my advertising expense. Okay, so I had to spend on advertising $400,000. Let me mark that off. So I spend $400,000 on advertising. Okay, and then down here I have the sales salaries expense. So I had salaries for my sales personnel. Okay, they're responsible for selling the product for me. So we have sales salaries expense. Okay, and I have $200,000. Okay, $200,000 that I spent on sales salaries expense. So I'm going to add those two together, and that's going to give me $600,000. Okay, so let's focus on the income statement now. Okay, so top section, this is what I generated. I generated $3,850,000 in sales, $3,850,000. I have to figure out the cost of goods sold. The cost of goods sold is how much did you spend in the manufacturing process to be able to manufacture the goods that you sold. Okay, so we calculated that we had a cost of goods sold of $1,996,50. Okay, giving me a profit, a gross profit of $1,859,350. That is the profit before any operating expenses. Then we incurred administrative and selling expenses. We incurred $373,000 in administrative expenses and $600,000 in selling expenses. Okay, so now I am going to calculate my total operating expenses. Operating expenses. So my total operating expenses is going to be my $373,000 plus my $600,000. Okay, I spend $973,000 in operating related expenses. Okay, so if I spend that much, then how much am I actually taking home? Okay, so I'm going to calculate my net income. Okay, my actual net income. Okay, so your net income is going to be your gross profit, which we calculated at $1,859,350, minus your total operating expenses of $973,000. So that's going to give you your net income of $886,350. Okay, so the income statement is very simple. It's broken down differently. We begin with our revenues, then we calculate our cost of goods sold so we can be able to calculate our gross profit before operating expenses. And then we classify the operating expenses either administrative or selling. So we can be able to calculate our total operating expenses. Once you get your total operating expenses, you get your gross profit less your total operating expenses, and that will give you your net income or loss, depending on how the company did. Okay, so in this particular video, we have covered two very important things, which is the preparation of the statement of goods, the statement of cost of goods manufactured, and the income statement. Okay, so you are going to have several problems in your homework practicing both of these statements. So this is a comprehensive rundown of how to do both. If you see, I marked off all of the data as I used it. That way I make sure I didn't miss a number, because it happens frequently that students miss one or two numbers, and that will cause them to be off in their homework. So make sure that as you're working the problem, you mark off the items that are being used. Please make sure that you always refer to your ebook, the sections that you're working on. That way you can read over those sections and become familiar with what that you need to be able to complete the problem. Okay. So like I stated, you do have check your works on your homework. That way you can check your work as you're progressing through the problems. You do have the show me how videos for the great majority of the problems. If you have a question or concern as you are working this problem, there is a feature in Cengage where you email the instructor and it will automatically send me a picture of what you're looking at, and then you just have to type in your question. I prefer that you do that. That way I have a direct access to your homework. Every student has different problems because they are algorithmic. So I do have, you can tell me, Miss, I'm having problems on the second one. Okay, but I don't know what your second problem looks like. So it's better that you use that feature in Cengage, email the instructor. That way I get a representation, a picture of what you're looking at, and I can respond. Now, just be very careful. The email that you set up on your Cengage account, when I email you back, that will be the email that you're going to get your answer to. Okay, so please make sure that you are monitoring those emails, because I've had students say, Miss, I sent you an email and I never got anything in Blackboard. You're not going to get my message in Blackboard. You're going to get it to the email that you set up. Okay, so please make sure that you just monitor that email. And that is basically it for this lecture. I hope it is of use to you. Please don't forget to read the chapter, review those PowerPoints, and if you have any questions or concerns, do not hesitate to either send me a Blackboard message, an email, or a Pronto message, and I will try to get back with you as soon as possible. Until next time, have a wonderful rest of your week. Bye-bye.